Good morning, MMTs. The time is 10:52 a.m. Pacific Standard Time. The date is 8/31/2014. We are covering the fear indicator on the S&P 500. When we had the correction in January, the fear indicator in January, so we're at 11.81 on the fear indicator. There was very complacent at that time, and remember, this is a weekly. And that was on 112. We shot straight up on the fear indicator to 2148. That's when the market and all the indexes had put a bottom in. And as we went down, stocks and indexes were rising higher. Over here, in this particular move from this low, it's a weekly low of 1028 right here. And we shot straight up here to 1757 on the fear indicator on the S&P 500, which was not extreme high at all. And that in the last month through August, this fear indicator right now hit a bottom of 1147, and on 8/24 that bottom was 1124. I want to make it very clear that when exuberance is in the markets, it's frothy. This is coming down on a weekly reversal. We did have a pullback, and the pullback was when we were down here at 10.28 on a weekly level. It was very complacent. We also said that the S&P 500 would come down, and it did. S&P dropped from 1984 to 1904. And then at that point, when we made that high was exactly 1757. So as we started to go down on a weekly level, and I showed you guys the S&P 500 looks identical to that. So that the 4-week rally on much lower volume has created a technical complacent where the indexes are, meaning that when this thing is low, no one has fear. That's what this is. It's a fear indicator. When they break higher, markets go down. When they break higher, markets go down. Just like in January, we call that move. When that goes higher and it comes down, that means markets hit their bottom. And right now, we're really starting to see that same pattern here on the volatility index relative to the S&P 500. Now, just to update everybody, I'm just going to show very quickly the S&P 500 index again relative to what? You got 4-week breakout off of that 20-week, okay? And I want people to be aware of what happened here. That's the light volume movement on the S&P 500. Let me show you something else. So what I've done, MMTs, is that in this chart right here that you see, that's the S&P 500 index. Now, just take a look. When we made that bottom at that 20-week moving average, both charts are weekly moving averages. When we went up and rallied up on low volume for 4 weeks, the fear indicator right here in the chart had a reversal. Now, let me just tell you something. This is a weekly chart on the fear indicator and volatility index relative to what? S&P 500 index. You bounced off the 20-week, you went straight up 4 weeks, and you went straight down 4 weeks on the fear indicator. And the reason why I'm showing it this way is so that once again, everybody is on board, and I'm going to blow this up again, this weekly chart. And, you know, from a perspective that, as you can see very clearly, for 2013 through 14, is we've had pullbacks, and we've had spikes in the fear. And when the fear was higher, that's when people were getting out of the market. And basically, there's the 4-week move in the fear indicator, very complacent, versus the, and I'll just blow this up again for you, versus the S&P 500 breakout. Straight up for 4 weeks, fear indicator went down straight 4 weeks in a row. That means that the upside is going to be limited. It means that people don't have any fear. It means that everyone feels it's okay. People are going to be coming back off of their vacation. And right now, the S&P 500 is short-term overbought, and the fear is down here at these levels. I couldn't explain it better to you. S&P 4 weeks up on light volume, and the fear indicator coming down and testing this support level once again. If we start to go higher, starting on Tuesday, September, a trade is going to come in. That means we're going to be monitoring this, because what it means is when we're at these lows, the market has exuberance in it, and it's due for another pullback. And this is the indicator that we use as far as the fear indicator goes. So stay tuned. 4 weeks up on the S&P, 4 straight weeks down on the fear indicator, and we're setting up, and we'll update people moving forward